Good morning, everybody, and welcome to my weekly market update. Today is Friday, the 14th of June, and I got a lot to cover today, so let's go ahead and dive right in. First of all, and I'll recap this at the end, but the $50,000 grant program that I mentioned last week, I've had so many people asking me questions about it, so I'm going to leave the banner up here on the top. If you have questions, click that QR code or click the link down below in the description, and I'll give you a lot more details about how it works. I'll talk to you more about that at the end, but I wanted to get that part out of the way very, very quickly. Let's start first with what the heck is happening with interest rates. We've had a crazy first part of June. So we saw the end of May, first week of June, interest rates started coming down. Last Friday, we had the jobs report, and I told you the jobs report was a bad news for mortgage rates. That we went over really deep last week with a good analogy. And the fact is mortgage rates moved up at the end of last week. Now we had Wednesday, a double whammy on Wednesday of this week, which is that we had the inflation report come out and we had the Federal Reserve meeting. So what happened? Well, the inflation report on Wednesday showed less inflation than what we had seen the first part of the year. So that's really good news, and that really helped to start moving interest rates down. But the Federal Reserve then released their announcement Wednesday afternoon, and they didn't really help things. They basically said, hey, we've been telling you all along we expected to drop rates around 3 times in 2024. And now they come out this week and said, nah, we're only dropping rates once. Now, there's no guarantee. This is their projection. They have what's called a dot plot, and they put out where each member expects rates to be every quarter going forward. And the majority of the members said up until now, they expected rates to fall 3 times in 2024. Now we're halfway through 2024. And the Fed says, maybe we're only going to drop them once. Here's the truth. The Fed only has 4 meetings left in 2024. They have one at the end of July. They have one in September. And then they have a meeting in November right after the election day. Literally the day after election day is when the Fed makes their next announcement, and then one in December. That means the Fed only has 2 more meetings before the presidential election. Now, a lot of people are going to say, John, the Fed has nothing to do with the president, or shall I say the president has no control over the Fed. I agree, officially. Unofficially, politics are, political. And so you've got the catch-22 that says, hey, the Federal Reserve has some political pressure. They are an appointed position. And so the Federal Reserve doesn't have to do what the president wants them to do. But the Federal Reserve has a little bit of wiggle room that they certainly could. Typically, lowering interest rates into an election makes the incumbent, the president that's currently in office, look better. That president can say, hey, look what I did. I lowered interest rates. Good for me. Pat on the back. I'm not being political here. I don't want to hear your political leanings. I'm just telling you the truth about no matter what side was in office, this is how the games that are played. There's only 2 remaining Federal Reserve meetings between now and election day. So did they drop rates at the end of July? I doubt it. Nobody thinks they're going to. September is when everybody thinks rates are going to drop by 0.25%. But remember, mortgage rates are not driven by what the Fed has done. They're driven by what we think the Fed is going to do. And so the Fed is basically giving mixed signals, just like they have all along. And I think the Fed is afraid that they're going to tell everybody, hey, everything is fine. We're going to start lowering rates. Rates start going down in anticipation, and that creates more spending, and it actually makes the problem of inflation worse. So the Fed's kind of in a catch-22 right now. Bottom line, we're in a higher for longer stance. I think that we're going to continue to see mortgage rates, and by the way, rates have come down some. So between Wednesday and today, we've seen rates drop, and we're definitely not in the 7s anymore. We're pushing the mid to high 6s in most situations. So that's really, 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 really good news. We'll see where it goes. We'll see specifically with what happens in the beginning of July with the employment report. That's the next big one. The jobs report at the beginning of June was not good news, but the inflation reports have all been on our side. So now the question is what's going to happen in the jobs report at the beginning of July is going to make a very big impact on the movement of interest rates going forward. All right. So I think I just talked about that. What the Fed just said and what's happening next is pretty much what I just covered. All right, so let's talk 2 more things. Specifically, I want to talk about Dream for All, and then I want to go back to talking about the $50,000 grant and give you some details about the $50,000 grant. Before I do that, I have a question or comment from F Sharp. Happy Friday. Dream for All program, how many points interest rate should drop? How many points should interest rates drop to make refinancing an option? Okay, so F sharp, what I hear you saying is, if I get Dream for All, how far should rates drop before I refinance? Clarify if I'm hearing that incorrectly. There isn't an exact question. What I'll tell you, or exact answer, what I'll tell you is it depends on your financial situation. There's two reasons to refinance on Dream for All. One, to lower your monthly payments. Number two, to buy out your partner. So if your goal is to say, hey, I want to buy out my partner in not having the state get any more of the appreciation in the home, but I don't want my payment to go up at all. But what I ran as a very, very rough calculation is you got to save about 2% off of your interest rate in order for your new payments, once we add in the money that you owe back to the state, to equal what your current payment is. The problem is it ever going to get there? How long is it going to take to get there? Should you do it anyway if you're only saving 1.5%? Generally speaking, a refinance makes sense if you're saving at least 1% off of your interest rate. But you only get one opportunity to refinance with Dream for All. So I don't know that I'd want to pull the trigger as soon as I hit the 1% mark, but I think hitting the 1.5% mark is when I'd start thinking about it. You save 2%, and I'd be strongly thinking about it. You start saving more than 2%, and you're in really, really good shape. Now, here's the alternative, which is if you're saying, hey, I'm struggling, I'm barely affording the monthly payment, even though I'm only paying 80% of the loan amount of the purchase price, I'm still barely affording that. Then you might need to pull the trigger sooner. You might need to get relief when you're saving only 1% off of your interest rate, because at that point in time, you're getting that savings to allow you to survive. So I always talk about decisions in both short-term and long-term. If we think about it, long-term, you're best off taking out a 15-year mortgage. By the way, Dream for All doesn't allow 15-year mortgages. But in general, you're better off taking out a 15-year mortgage. As a matter of fact, if 15 years is good, then 10 years is better. If 10 is good, then 5 years is better. All of those things are true because the shorter amount of time you take to pay off a mortgage, the lower interest dollars you spend. So long-term, the shortest amount of time to pay off your mortgage is best. But short-term, if you set yourself up on a 15-year mortgage or even a 10-year mortgage, you probably can't afford the payment. So even though it's going to save you money in the long term, if you can't get to the long term, if you can't actually survive the monthly payments to see the long-term benefit, then there is zero long-term benefit. So you always have to weigh the short term versus the long term. If refinancing costs you more money in the long run, but it allows you to stay in your home, to send your kids to college, to have the things that you want in your life to enjoy. And I'm not talking about crazy things. I'm not talking about unnecessary things. But there are some people that own a home that their numbers are super tight. Their monthly payment is really tight, and they don't have the ability to pay for medical care or prescription drugs. I know I'm giving a real extreme example here, but it's helpful to say it that way. That person needs to focus on the short term. They need to figure out a way to survive now. So you've got to decide, what are the things that are important to me short term, and do I take the short term gain and the long term cost? Let's be real. That's what Dream for All is all about. It costs you more in the long term to use Dream for All, but it's about the only way most of us can afford to buy a home in today's crazy market is using the Dream for All program. If you don't use Dream for All, you're better off long term, but short term, you might not get the house you want. It might not be in the neighborhood you want. It might not be the size of home that you want. You're making a lot of concessions, or it has a higher monthly payment than you are willing to spend because it's important for you to send your kids to gymnastics and to baseball and to swimming and all the things that they do. And I'm not saying those are bad things. I'm saying you're creating memories for your children. You're creating a future for them, and you have to decide what's more important. So those are all the decisions that I look at. F sharp, that was not what you asked, but I think I gave you your answer and a little bit more. So hopefully that was helpful, gang. I'm happy to get hijacked if you have questions while we're talking. Billy says, good afternoon. Good afternoon, Billy. Good to hear from you again, my friend. All right, so let's jump back into when are the Dream for All winners going to be announced? We still don't know. Calhafa has been silent. They've literally not updated anybody in the last 2 weeks. That's a little worrisome. They said a month ago that they expected it to always be, not always, I was reading F Sharp's comments. So he said, hold on, I can't pull it up now. Let's get this out of the way. He said, always dropping the knowledge. Thank you, F-Sharp. I appreciate that. So CalHFA said in mid-May that they are projecting the middle of June, and that just to be safe, they're telling everybody it could be as late as the end of June. We're literally in the middle of June. It is June 14th. We are 2 weeks into the month of June, and we have heard squat from CalHFA. And I'm not mad at them. They're not saying anything, in my opinion, because they have nothing to say. They have no clue how soon they're going to be done. This is a first-time endeavor for them to go this deep in a selection process and to be vetting everybody. I think they might have bit off more than they can chew. And again, I'm not mad at them. I'm not picking on them. I'm not trying to be mean. I'm just trying to be realistic. Realistically speaking, we could be looking in July. Now, I hope not. I hope we're going to hear in the next 2 weeks. My gut says that if we don't hear probably by the end of next week or middle of the following week, they're gonna put up some kind of an announcement telling us why and what's going on. I don't think they're going to wait until June 30th or July 1st to tell everybody, hey, by the way, we're not going to have anything out in June. They have made it clear they are projecting the latter half of June. On Monday, we enter the latter half of June. Are we going to find out next week? I don't know. I hope they give us some form of an update, but I want to keep you guys informed on everything that I know so that you can keep informed yourself. All right. So let's talk about the final topic, the biggest topic that I've been hearing about for the last week, and that is the $50,000 grant program. So I'm going to recap this. I put out a video last week. I'm going to tell you what I know and what I've learned. So the San Francisco Federal Home Loan Bank announced this program a week and a half ago. Member banks are right now digesting the rules. There's a webinar this week that I listened in on. They're talking about, hey, how are these rules going to work? And more of the member banks are raising their hands saying, yep, I'm going to participate. Now, I've been reaching out to the ones that I've already had relationships with. The majority of them say, John, there's only a certain amount of money and it's going to go quickly. And we're only going to offer that to people who do their first mortgage with us. So far, I have not found anybody who says, yes, we will let the buyers use whatever bank they want for the first mortgage, and we will do the middle income grant. So I have not heard of anybody actually releasing the money. But here's the key. They're all regional. I've looked up a few. There's some that are in 2 counties, some that are in 4 or 5 counties, but each bank has a local footprint of where they're willing to lend. And it's a lot of legwork for you to figure that out. So my goal is to help guide you through this process. If you can get into that program, even if I'm not the one to serve you, I'm going to help you get there. What I want is your loyalty for the future. What I want is when it's time to refinance, you come back to me. When your friends and family say, hey, I'm thinking about getting a great house like you did, you say, stop before you do anything else. You need to call John King. That's what I am earning from you, is that future business. And if it means I don't do this deal for you right now, that's okay. I want to be your resource. I want you to share my channel. I want you to share my videos with everybody you know to make sure everybody looks to me as the resource, even if I'm not getting compensated for the transaction. All right, before I go on with more updates, Davis has a comment question. What if you've gotten a raise since your Dream for All application? Do I need to notify CalHFA and my lender? Davis, great question. No, you don't need to notify them. It will impact your ability to qualify. So if your raise puts you above the income limit, your lender will need to recalculate your income. But there's really no point in running that exercise until you figure out whether you've been selected or not. So a raise will matter, but whether it's going to take you over the limit or not, your lender is going to determine that. But your lender's not, even if they determine you're over the limit, you could buy in a different county. Now, you may not want to buy in a different county, in which case, when you get your results, if you're selected for Dream for All, you would want to cancel your reservation. You'd say, hey, I don't qualify anymore, give it to somebody else, and you would cancel your reservation. But there's really nothing to do yet. What I would say is just wait. You tell your lender so they can at least look at it and rerun the numbers, but wait to see if you're selected is the best advice that I've got. All right. So the $50,000 grant program, it is specifically requiring you to be a first-time home buyer. No big deal. All of you who are looking at Dream for All are first-time home buyers. It does not have its own separate income calculation. So that was interesting because the same entity, the San Francisco Federal Home Loan Bank, that is giving out the middle income grant program also gives out the WISH program. And the WISH program has really specific income rules. This one simply says we use whatever income your first mortgage lender is using. Now, debt to income ratio is my biggest concern. I have yet to hear or see a specific required number. All they say is it must be affordable. Now, I've talked to a few banks. They consider affordable no more than 35% of your income going towards your total monthly payments, including your house payment and your credit card payment and your car payment and your student loans. That is significantly less than the 50% that Fannie Mae and Freddie Mac allow. So if you're thinking, hey, this program is going to be the end all be all because it's going to provide me $50,000 of free money that's a grant, and it is, you have to have $10,000 of your own money, but you might have individual banks saying, no, we think your debt to income ratio is too high. It's up to the individual bank who's doing the first mortgage to decide. Let me rephrase that. It's up to the individual bank who's facilitating the grant, which most of them so far are saying they'll only facilitate the grant if they do the first mortgage. But it's up to them to decide whether your debt to income ratio is too high. It's up to them to decide whether this payment is affordable or not. That's scary because that is each individual bank making their own decision that they're ultimately held liable to the Federal Reserve Bank down the road. Well, they're going to be pretty conservative in their decision making, in my opinion. So it's really, really important to understand that there are no set rules on this stuff. So be aware of that fact. Let me look at my notes here to see if there's anything else. Okay. To reserve the money, you have to be in contract with a close of escrow date of less than 60 days away. This feels a lot like Dream for All 2023 because it was a mad rush to get into contract and then reserve your funds. And there is no exact date of when the money is going to start being eligible to be reserved. No bank has told me yet when they're actually going to start accepting reservations, but you cannot reserve the money ahead of being in a contract. You must be in contract with a close of escrow date of less than 60 days, and you have to have at least 10 days from the time of final loan approval before close of escrow, because it's going to take them 10 business days, 2 weeks, in order to complete the funding of the grant program. Well, it takes the average mortgage company about 3 to 4 weeks to complete their part of the loan process. Now you're adding an extra 2 weeks for the middle income grant program, and you can't even reserve the money until you're in escrow, which means you've got to write an escrow that's at least a 45-day escrow, maybe a 60-day escrow, and this is a highly competitive market. So you're going to have to find a seller willing to take a long escrow period from you. And technically, you won't know if you actually have the grant money coming until you're in escrow. And then you might need to cancel escrow if the money has already run out. It looks a lot like Dream for All 2023 with a mad rush once we figure out when they're actually going to release the money. So if you have questions about it, you want to have us take a look at your income relative to the county you're looking to buy in, scan the QR code above or click the link down below, give us your information. We'll reach out and collect some info from you in order to make this happen. The final thing that I learned about the middle income grant is you must be buying from a non-related party. Like you can't buy a home from a family member. It must be what's called a non-arm's length transaction. So that's an important thing for some of you. All right, now it is time for questions. So if anybody has any questions, I know there's at least one I'm pulling up right now. If you have questions, feel free to post right now and I'll be happy to answer it. So Hockey Dork says, can the grant be combined with other CalHFA loans like Dream for All? I don't think so. Here's why. First of all, CalHFA doesn't care. The San Francisco Federal Home Loan Bank doesn't care. But most of the banks that are actually the members facilitating the money are not allowing for any other institution to do the first mortgage. Yet CalHFA has to do the first mortgage if you're doing a CalHFA loan. So can you combine it with other programs? The general answer is yes, but all parties have to be willing to play together. And right now it's those member banks that so far are saying, hey, we're not gonna release this for funding when we're not getting paid on the first mortgage. I get it. I understand their profit comes from doing the first mortgage. So they're not making any profit on the grant program. Why wouldn't they do the work to provide the grant and not do the first mortgage? I get it. But the reality is most of those credit unions are not, none of them that I'm aware of are signed up to do CalHFA loans. So you've got a challenge that says, hey, that one entity that controls the grant money, doesn't participate with CalHFA, and most of them so far are not allowing you to use an outside lender such as myself and still get the grant program. So Hockey Dork, I hope that makes sense. Gang, if there are no other questions, I'm going to go ahead and let you go. I appreciate you listening today. Please remember, I want to be your resource, both for you, for your family, for your friends, for your colleagues, for people you like, people you hate. I'm just kidding. Actually, I'm not. So if you know somebody who could use this information, please share it with them. If you haven't subscribed already, please subscribe. Hope everybody has an absolutely wonderful Father's Day weekend, and we'll talk to y'all next week. Bye-bye.